So can we still see more weakness in the Singapore market, in particular the Straits Times Index, the STI right here trading at about 3,183 right now. So over the past 1 to 2 weeks, we have seen weakness in the US market, even in the Singapore markets, even the Singapore banks have sold off, and the main reason for it was due to inflationary pressures still remaining high, and the Fed Chairman Jerome Powell kind of coming out and hinting that rates will likely need to rise even further than what market participants had expected, right? And that's where the market started to sell off, all right? And right now we are at this critical level for the STI. So let's just go to discover what it is for the STI, if there can be more weakness, and if there is indeed more weakness, where could we potentially head to before some bargain hunting can actually come back again, which might actually be a good opportunity to start loading up if you are kind of like want to get in on dips on some of these blue chips, even on the STI ETF. You want to get in on the entire market, that could be an opportunity as well. So let's dive into the STI right now. Make sure you watch this video all the way to the end and hit the like button and smash the subscribe button as well. That would really help out the channel. Let's go. So STI right here, Straits Times Index at about 3,183, right? So before I talk about where we are, I just want to do a quick recap of what has happened over the past 1 year, right? So you can see that we were pretty much, consolidating last year in 2022 from like 3,002 to 3,003. This was pretty much the range, right? A very good consolidation range right here. Let me just put it in black in color. And we also had this consolidation range right here. You can see we kind of broke up, went up, and we sold back off to this consolidation range. So the range was pretty much, in 2022, even up to this year as well, from 3,002 to 3,003, we were consolidating, we broke up, went up, but now we are back down. So this 3,002, I would say, would be a really firm support level, right? So this was like the support level. Let me just show it for you. You can see right here, rebounded, and we broke down, we sold all the way down. And look at this, right? So a couple of rebounds from here as a support, also where the longer term moving averages line are, right? So the lines, the blue line is the 200 days moving average. You can see the red line is the 100 days moving average. So it kind of coincides with where the 3,200 is, right? So this 3,002 would be what we call a pretty decent support level that we want to definitely stay above for more upside to happen, or just to continue its sideways consolidation, right? So the 3,200 level, all right? But what happens is that, over the past 1 day, right, 1 to 2 days, you can see that we kind of broke down. In fact, right now today, we have gone below this 3,200. Now it's like 3,181. I mean, that is below 3,200, right? So that's where you want to be careful, because staying below 3,200, like what we saw over here, I mean, this was in September 2022. So I'm not saying that, if it breaks 3,002, it will like hit all the way down, but you just want to be careful, right? Because if we stay below 3,002, we break below, we stay below over the next few days, over the next 1 or 2 weeks, that's where potentially, right, some selling can come back again. Like right, what we saw over here, you can see we rebounded and went all the way down towards that 3,000 psychological level. So that's where you want to be a bit careful. I mean, hopefully we can kind of rebound back up above 3,002, over the next few days. Great. If that happens, I think that will be slightly more positive for the market. But if not, you want to be slightly more bearish. I mean, in the short term, we could potentially head lower. And where would that downside be? I think downside could be anywhere towards that, 3,001. I think maybe about 3,001. That is potentially where some bargain hunting can come back again. Why? Look at this right here. This was in June 2022 last year. Look at this right here. A couple of rebounds. We neared it, rebounded. A couple of rebounds from here. So I think near 3050, 3001, I think that is potentially where some bargain hunting can come back again. Of course, we have that 3,000 psychological support level. That level is key. We have been holding above 3,000 since like 2 years back in 2021. So obviously that level must hold, but maybe not even 3,000, somewhere near 3050 to 3001. That's where potentially some bargain hunting or some buying pressure can come back again. So you are those who want to like get in on dips, on the banks or maybe the entire index. That's where you could potentially also try to time your entry to get in, all right, to ride the rebound, right, all the way back to maybe that 3,002, and of course the previous high that we've seen for the entire market, I think I mentioned in some of my other videos as well, would be this level. I think that would be the 3,450. You can see we kind of like neared it over the past like 2 years. Unfortunately, we neared it like, I think about 2 months back, and selling came back again. So I would say the market for the STI in the mid to long term, we are still in some sort of a consolidation phase, more like a sideways movement. And as I mentioned, just look at the blue line, the 200 days moving average, and the red line, the 100 days moving average. You can see that both of them are pretty much just flattening out. That shows that we are in a kind of like a sideways movement in the mid to long term, which can be up to three months to 6 months, up to a year. That is pretty much the range, unless, right, we kind of like break above that 3450. Like I mentioned, these are the two key resistance level, 3450, maybe 3004. Those are all key levels. If you can break that level, I think that would be a new phase for the entire Singapore market for the STI. But right now, short-term wise, just looks a little bit more bearish, I would say, below 3002, right? So now it's 3182. And also what we can see is that in the short term, we can also look at what we call the 20 days moving average. So I've been focusing on the red and blue line, which is the 100 days and 200 days moving average, but we can also look at the 20 days moving average for the short term. And what is that 20 days moving average? Well, this is the green line, right? You can see it's like moving up, kind of like traded up, and since like February, right, somewhere around like mid of Feb, we broke down this green line. You can see broke down the green line 20 days moving average started to point down, and obviously this green line is still pointing down right now. So short term wise, because this 20 days moving average is pointing down, prices below it, we break the 3002. Unfortunately, that can lead to more short term weakness. All right, so this is the STI. So I hope I've just given you a quick understanding of where we are right now for the STI, where we can potentially head to, and I hope you found this video useful. If you do, just remember to smash the like button, hit the subscribe button as well. That would definitely help out the channel, and thank you so much for doing this. So Joey here, thank you so much for watching. Take care.